A little bright spot in the tech world. We may be seeing signs that Silicon Valley's economy is recovering. Tech startups are having an easier time paying their bills. That's according to SVB Financial Group. So are outlooks for startups improving? Tim Mullaney, is working from California today. He joins us from our San Francisco bureau. Tim, is the situation easing over in the Valley there?
Yeah, people are thinking that they're seeing at least the end of the beginning, if not the beginning of the end of the recession. They feel like it's at a bottom, and one of the things that people look at is the rate at which people are having trouble paying their loans to Silicon Valley Bank. Now, Silicon Valley Bank is not the biggest bank in the world, but it is the biggest bank in the Valley, and they make a specialty of startups. About half of all U.S. venture-backed companies do business with this one bank. So you can learn a lot simply by looking at this one company that's small enough to understand without trying to mine a mountain of aggregate data.
Well, how willing are venture capitalists to fork over the cash?
Well, you know, the bar is much higher. The rate of financing for first-time financings for new companies in the second quarter was the lowest in 14 years. However, what Silicon Valley Bank is saying is that for companies that are a little more mature, the market conditions are improving just a little bit for getting some financing, but even more so, they're getting a little bit more sales because the rate of decline in capacity utilization in information technology went, moderated in July, as the Federal Reserve reported today, and all these companies that just need a few $1,000s to stay current on their loans or to avoid that extra layoff at the margin. They are having an easier time getting that extra sale or that little bit of capital. Now, no one should miss. Go ahead. I'm sorry.
But Tim, what are the chances of some loan defaults from some of these startups?
Well, Silicon Valley Bank has reserves of about 2% of their total loan portfolio, a good bit of which is tied up in one particular loan.
Right.
We were sitting with their CEO of both of the bank and of the holding company the other day, and they were telling us that they did not see accelerated growth in their allocations to loan loss reserves. They cut their allocation to loan loss reserves by 50% in the second quarter, and they expect to be able to hold it at the lower level.
Then, Tim, in about 20 seconds, what did Silicon Valley learn from the last recession?
They learned to take less risk. Maybe they overlearned that a little bit too well. I can tell you companies from all over the Valley and all over the startup scene around the world that are not doing things because they can't get the money.
Right.
You can tell you about companies that have canceled plans to put diagnostics for Down syndrome so you can tell, without doing an amniocentesis and do it more safely. That's been canceled because the company involved couldn't do an IPO. I can show you companies that are not building cellulosic ethanol plants. And I just got off the phone before I came in here with a very small company that is canceling products.
Tim, I'm sorry, we're coming up against a break, but